The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. This is the Money Masters. I'm sorry, I got that all screwed up, did I not? I was multitasking. Oh, that was terrible. Hey, let's try that over. Good day, Money Masters and Treasure Hunters. Welcome to the November 11th, terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a fabulous start of your day. Let's make sure that you and I, that we do all that we can do to squeeze everything out of it and have one heck of a terrific Tuesday out here. Remember, we should always remember that what's dreamed about, well, what's dreamed about is really what's talked about out there. What's envisioned, though, that, folks, that is exciting. What's planned, though, when you plan something, it becomes possible. But more importantly, when you schedule it, that is what becomes real. And I want to tell you that I am grateful for you scheduling some time with me here this morning out here. I'm truly honored by your presence, and I'm here to serve you. So you can give me a call at 877-927-6648. Internationally, that number is 727-445-1044. Remember, if you've got a question, somebody else has got that same question. So don't do it for me. Don't do it for yourself. Do it for someone else. A little a little random act of kindness out there. That's what it's all about, especially on Veterans Day. It is terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Flat market out here. Dow's off 7 points. It's trading out at 17,607. Let's take a look at the S&P. It's flat. It's trading at 2,038. Composite off 5 points. Trade at 46.46. Russell 2000 off about 2 points. Trade at 11.77. The DAX is down 9. The FTSE's up 3. We got flat markets out here all across the board. Gold's off $6 right now, but the miners are on the move. Silver's off 12 pennies. The miners are on the move, so we'll take a look at that. Light sweet crude back 25 cents right now. She's traded at 77.15. Natural gas had pulled back, but it's off its session lows, down 3 pennies as we speak right now. Leading the charge, the upside, it is Priceline. PCLN up 1.5%, up $17 and change. ICU Medical, ICUI. That's the ticker symbol, up 12%, up $9. Tesla's up $7, up 3%. CF Industries up $6, up $2.30. Rackspace Holding, haven't seen that name for a while. We'll take a look at that. That's up 10% this morning. Whirlpool up about 2%. That's up $3. To the downside, it's Woodward Inc., not to be confused with Woodward Avenue in Detroit. What a great avenue that is. Woodward is down 8% off $4. Applied Optoelectronics down 25% off $3.90. So we'll take a look at a number of stocks that are moving, even if the market is not. Let's begin by taking a look at what's going on inside of the miners out here. Now, you got the XAU and the HUI up a bit this morning. We know that we had the miners move up higher on Friday. Let's just take a look at the XAU. Let's just pull that up on our screen out here. We know the XAU had moved up nicely on Friday. Pulled back yesterday, taking back most of those gains. It's got one of my favorite patterns out here where prices moving lower on less relative weakness out there. I'm going to be teaching that pattern, exactly how you trade that, what to look for. I'm going to be doing that in a 7-week trading workshop that we're holding here at TFNN. You can go over to the front page of TFNN.com. You will see the details there. In fact, I'll punch it up on my screen here. Try to punch it up on my screen here right now. Did that do it? No. Let's try this button right here. Did that do it? No. How about that? Let's just do it. There we go. It's the 7-week trading program. Now, the way that we're going to do this is it's very cool. We're going to hold a workshop that begins on Saturday, November 22nd. So that way it doesn't interfere with your normal life. Now, it's going to be 3 hours. Now, what I'm going to compact in that 3-hour time period There's a lot of what I can pack in kind of like an 8 hour. So it's going to be slammed with just the information that you absolutely need to know. It's going to be the best of the best. So that's going to be the first element. It's held between 9 and 12. So that way, which is right there in the, all you're going to miss is really game day, but you're not going to miss any of the games out there. And you do this from the comfort of your den, of your living room. Of course, it's going to be archived. So if you're busy on a Saturday morning because you're at soccer games, things of that sort, no big deal. It'll be archived. You'll be able to pick up on that archive very quickly. Then for 7 weeks, what I'm going to be doing is I'm going to be providing you with a weekly follow-up. So each Monday, you're going to get a weekly follow-up to specific patterns I'm going to be teaching you that exist on 2 or 3 instruments out there so that you can follow along the way. We can identify what worked, what didn't work, where are the money management tools, and then we're going to do, and this is why it's a coaching and it's a trading program, so it's not all just kind of crammed into one time frame. Of course, it's the holiday season, so your mind is going to be multitasking as well. And what we'll do is we'll then follow that up with a live workshop on a Friday from 9 to 12, and that's going to be on January the 9th. Cost to enter the workshop, $3.95 if you are not a subscriber. Of course, if you are a subscriber to my newsletter service, you can get in for $2.95. So we're talking about less than $1 a day out there for trading patterns that you absolutely want to know. It's going to be the best of the best. So again, all the details on the home page of TFNN.com. What do we know? We've got this trading pattern here that's set up inside of the XAU out here. That nice move higher. What the XAU needs to do right now is it needs to go ahead and take out that high from November 7th. If it does that, then you're setting up a small A to B equals CD to the upside. That high is at 69.20. Let's go take a look at some of the actual mining stocks out here that are moving. In fact, if I go ahead, if you're watching us on Tiger TV, and I hope that you are, if you're listening on the radio, your mobile device at TFNN.mobi, let me describe to you what it is you're looking at. I'm going to put up a screen here, and that screen along the left-hand side are basically about 40 different mining equities, 40 different mining equities. If we take a look at those mining equities, even with gold pulling back, even with the U.S. dollar index moving a bit higher here, we can see that in essence about 36 of those 40 are in the green out here. They're moving higher. They're just, and we saw this pattern. What's interesting is we saw this pattern the day before the XAU. No, that was the day that the XAU. Well, we saw. Let me go back here. Which day? We can go back and find out exactly which day it was. So inside the XAU, we saw that same pattern take place right here. That was on November the 6th. November the 6th, we saw gold pulling back. The U.S. dollar index was moving higher. Yet all the mining equities had it started moving higher. And then we saw that continuation, and that was on November the 7th out there. Maybe we got the same kind of pattern here that is playing out today. The mining equities are saying, hey, not so fast. So if we do take a look at some of those mining equities, let's go take a look at Randgold Resources, GOLD. That's the ticker symbol on it. It's up $1.08 right now. If we take a look at what this had done, this made a low back here on the trading session of October the 31st out there, made a high on November the 7th. If we take a look at Randgold, so pulled back, as it was pulled back yesterday, volume 1.2 million shares after moving higher with 1.5 million shares after moving higher with 2.2. So we know about Randgold pulling back with light volume out there. So that's beautiful. We take a look at retracements. Let's take a look at retracements now from the low of October 31st to the high out here on November the 7th. I'm drawing the A to B equals CD. Maybe I'm getting a little bit ahead of myself, but let's actually take a look at the retracements. I'll do that. I'll leave the A to B equals CD pattern in there. So if we take a look at the retracements from low to high, what you're going to notice is so far what really took place yesterday is a 0.382 retracement. Now, picture the gold, picture the U.S. dollar index actually starting to pull back or the euro moving higher, which is really the type of acceleration and action that's going to be needed for these mining stocks to take off. If that is to occur today, tomorrow, and gold, speaking of when I say gold, I'm actually referring to Randgold in this case here, ticker symbol GOLD. If it's actually able to hold 63.88, which is a 0.382 retracement, yesterday's low is actually 63.50, and it takes off from here, what you're going to see Randgold do is not move to 73.01, but at least move to 75.60 because it has got a bunch of energy that it wants to try to get out of its system, and it will at least move up to that level. If we take a look at Randgold, if it's able to do that, it's going to get above its market profile resistance range at the 68.86 area. So far, volume this morning, 255,000 shares. We've been trading for 45 minutes. Yesterday's pullback, 1.2 million. So if I do the quick math on this, 250, about 300 or so, 3 and a quarter, 3 times 6, 1.8 million. So you've actually got, geez, if it kept up this volume pace inside Rand Gold is higher on the way up than yesterday on the way down, and actually potentially higher than the November 7th candle out there. So volume 300, yeah. You've actually got some volume behind the move here in Rand Gold. Very interesting. Let's go take a look at the number one weighting inside of the GDX out here. That would be Gold Corp. So as of yesterday, I think they might have been about 12 or 13% inside of the GDX. Now you can just go to the Market Vectors GDX. You can see each day what the weighting structure is inside of the GDX. I recommend that you do that if you're going to trade the GDX, the Nugget, or Dust, or any of those ETFs, because then what you'll find is that it might be the top 7 equities inside of the GDX. They represent 51% of what's going on out there out of a total of 41 equities inside that. So I do think it's important to take a look at what's going on inside the top 10 at least. Well, Rand Gold, not Rand Gold, but Gold Corp, my recollection, when I took a look at it yesterday, I think it is the number one weighting inside there. I think Barrick might be number 2. Now, if we take a look at Rand Gold, in order for the GDX to really move higher, you're going to really want Gold Corp to truly fall in line here. Now, if we take a look at this, this came down on October 30th, October 31st. What I shared with you yesterday is my conclusion, my kind of like a belief. This gets beyond technical analysis. I use the technical term, which most people don't use it too often. Thankfully, you don't have to use it too often. That's the technical term of puking, which is really what the mining equities were doing, which was what gold was doing as well. And now, what was really going on here, my belief, what was really going on as we approach that October 30th, October 31st level, where we saw volume that was moving down with velocity, had more to do with the fact that because of year ends for different mutual funds, hedge funds, and so forth, because of their year ends out there, they did not want to have those mining positions inside their portfolio. So they just simply dumped. They got rid of them. That provides for nice bargain hunting, potential nice bargain hunting out here. Now, this bargain hunting is not going to get underway in full-fledged gear until we see the U.S. dollar index start to pull back, or at least it is likely not going to do that. So those volume bars, look, we still have to pay attention, because I don't know if my hypothesis is correct or not. I believe it's got some good merit to it. But in the case of Gold Corp, what it really needs to do in order to get some volume, it needs to get above the gap that's out here. And that gap was created from the low of October 29th. That's at 21.42. In the case of Gold Corp, we'll know in that volume, by the way, on the way down was 21 million shares. We've seen like a junior sign of strength. There's 14 million shares on Friday, as some of the other mining equities were moving higher with more velocity, with more volume out there. And then we saw a pullback yesterday with 11 million. A little bit more than you like, but still, nonetheless, it was pulling back with some light volume out here. All that Gold Corp did yesterday, let's see, did it do it? The high from November 6th was 1807. The low from yesterday, 1895. No, it didn't even do that. This is Steve Rhodes. This is TFNN. We'll be right back. 1880s.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let me get back to my charts here. Right now, you got the Dow's. The Dow is flat. The S&P is flat. The composite basically flat as well, down 2 points out there. So we were taking a look at a couple of the gold mining stocks before we went to that break here. That's why I was a little bit off kilter. I want to go back to this one chart, pull this back further. I was taking a look at, we were specifically taking a look at Gold Corp out here because it's the number one weighting structure inside of the, that's interesting. Now, how interesting is that? Wow. So it's always good to go back and do the homework. I want to go make sure, yeah, I know that that's it. So I'll tell you what I did out here. This is pretty wild. I want to see what the, son of a gun, 20 million shares. Okay. If you're watching this on Tiger TV, let me describe to you what I'm doing. So one of our great denners out here was pointing out the when we take a look at Gold Corp, was pointing out the high volume below on a monthly chart. Now we'll go back and we'll take a look at it. So we'll as Tom likes to say, we'll bisect it and dissect it. But now that I'm to the daily chart out here, this is kind of interesting because what I did, folks, is I stepped. It's always good, no matter what it is that you're trading. It's always good, if you're an intermediate term trader, meaning you're looking at in essence weekly information to make a determination as far as what the market is doing. Go take a look at monthly, take a look at daily, understand what's going on one level above you, one level below you, just so you get an overall picture. Now, in the case of Gold Corp, I'm taking you back to October 24th, 2008 out here. So Gold Corp in 2008 made a significant bottom. The top of that candle session is $17.03. Now, the volume out there was 21 million shares, okay? So remember that, 21 million shares. Write that down on a pad of paper, okay? So I'll do that. I'll write it down, 21 million. Of course, I need some more ink in this pen. So you got about 21 million shares out there. And that is the swing point low on the daily. That's the swing point high on the daily chart. The bottom of that happens to be 1384. So it's at 1384 that was really the question. That's the low from the monthly standpoint as well. So 21 million shares on the daily chart. Here's what's kind of interesting. If we fast forward to what did Gold Corp actually do when all that puking that I mentioned was going on back on October 30th and 31st, the actual low on October 31st inside Gold Corp was 1701. And the volume there was 20,500,000 shares. So we've actually seen a test of the high of that swing point on the daily chart with slightly lighter volume out there. That's pretty interesting. So the question is, does the low of that swing point at 1384 have to be tested? My thesis is no. So the swing point, the actual swing point that got you down to 1384 has been tested. It's been tested on lighter volume. Now, if you get a close below 1703, if you believe that the 1384 is going to get tested, you're going to need to see a close below 1703, and you'll want to see that occur with more than 20 million shares out there. So 1703, it's been tested, it's been rejected with slightly lighter volume out here. Gold Corp then comes off of that bottom. It's in the process of forming the A to B equals CD to the upside pattern, moves higher on Friday, November the 7th, does with 14 million shares, pulls back yesterday with 11 million shares. What will give us further evidence of a bottom inside of Gold Corp, and therefore the GDX as well, is going to be a move above last Friday's high with volume. That November 7th high is $20.04. Volume there, 14 million shares. If we see that, it's going to be a fairly good A to B equals C to the upside and ought to run into at least a 2261. Now, so that's what the daily is doing out there. So I want to say thank you to Peak D for even bringing that up because I hadn't gone back to test that. But if we go take a look at the weekly chart, I'll start with the monthly chart out here just to show you what he was also looking at, which is this high volume for the month of October 2008. Forget about the day that we took a look at, but for the month, and where we saw that move down to 1384, you had volume of 421 million shares. And last month, for the month of October, you came into it with 187. So 187 versus 421, not even close by any stretch of the imagination. And now we've tested the top of the daily swing point that made that 1384 with lighter volume. Kind of cool, huh? We take a look at the weekly chart out here. The weekly chart shows the volume pattern as well that was tested, or you're inside it. So that's the danger. You're inside that swing point on the daily, on the weekly. As we take a look at, come on, go back there, fill that in for me. Come on, fill that. There we go. We take a look at the weekly candle session as well. It had 85 million shares versus last week out here, 57 million shares. So as we take a look at that, the bottom fishing could easily be in for Gold Corp. The real key level there is 1703. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is, it's flat. It's up $2. S&P is up $1. Composite is up $1 as well. I did go ahead and check on the GDX holdings. As of yesterday, Gold Corp was about 14%, 13.87%. Barrick is about 12%. Newmont's 8%. Franco-Nevada about, 8%. No, 7% out there. Silver Wheaton about 6%. Rand Gold about 5%. You just take those 2, 4, 6 represent about 50% or more of the actual GDX, a total of 41%, 41 holdings out there. Okay, let's go take a look at some of the other things that are moving inside the marketplace. The market is flat out here, but not necessarily inside the individual stocks. So let's go take a look at a couple things moving to the downside out here. Let's check out AAOI, Applied Optoelectronics out here. Looks like they were out with numbers. So let's go see what, let's forget about the numbers. Let's go look at their chart numbers out here. So it's down with volume, taking on its most recent swing point from October the 13th. That only had volume of about 287,000 shares. So it's not the most liquid of stocks, but today it's in 1.5 million shares. Now, it is, that low, by the way, is 12.12. You're at 11.98 right now. Let's take a look. Stock looks kind of miserable out here. And it's off its 50. Its all-time high out here was back in March of 2014. $28. You're at $11 right now. That's misery. Let's go see if we can figure out where this thing is trying to move to. I really can't, because it looks like the IPO was September 26, 2013. So best case is that it's probably headed back to that low, which would put nobody in a winning position. That is at about $9.37. So you're trading at $11.98. You'd have to say that is likely a spot where that is going to head down to. If we take a look at Wayfair Inc., that's off 13%, down $3.58. They were out with numbers as well. This is I've got the daily chart. Looks like this is an IPO also. Holy shnikes out here. This is an IPO from October 2nd, 2014. Talk about highway robbery out here. This got up to a high of $39.43. You're trading at $24.52 right now. It's got this little hammer candle. Not a ton of volume on this. Looks like about 1 million shares or so per day. Yesterday made a high with 600,000 shares. Today you pulled back with 900,000 shares. So it looks like the low of the existence of this equity, the low, which is a hammer candle from October 15th, ought to be tested. That's at a price level about $22.56. That is ticker symbol W, Wayfair. We look at let's see what else. Woodward Inc., WWD out here. They also were out with numbers. Looks like net earnings about $51 million versus $52, and revenues came in just a tad higher, $565 versus $558. Nonetheless, this has had some volume to the downside. This is volume off of its highs out here. Not all-time highs, but highs most recently over the course of the last several days out here. This is moving down so far. Volume today, 346,000 shares out here. It's found support at its TAS market profile low, but getting below 48.22, you'd have to say pretty good chance this thing comes back to its breakout areas. The breakout area, last time price came back here, the breakout that I'm referring to is from June 5th, 2014. That had 1.4 million shares to the upside, so volume today is pretty it's probably more than that if it is going to keep up. That says at the breakout level, which was the June 6th high, 44.74, that's probably where this is headed to. Now, it never got all the way down to 44.74. It got to 44.79 on October 15th. That had volume there of only 362 million shares. So if that level fails, it has another breakout area. Its first sign of strength came in on April 23rd, and that is right around the 43.13. This does have volume at the highs. So at some point in time, this is worth taking a look at. The volume at its all-time high out here, that was with 1.6 million shares. So today's volume is, I would say, as long as it doesn't do more than 1.6 million shares out here, then a pretty decent chance that Wayfair, I don't know what they do, but price should get back up to that high volume high on the daily. If I switch over to the weekly here quickly, let me see if it's a high volume high on the weekly, increasing your chances that price would also get back up there. And, yeah, it is. You've got 3 million shares up at that high from July, the weekend of July 21st, 2014. That is what's going on inside ticker symbol W, or I'm sorry, that was WWD. That is Woodward Inc. Now, let's look at Alibaba. BABA is a ticker symbol. This thing has absolutely been on fire as funds continue to pile into it. Let's take a look at the daily chart out here. Not a ton of technical information inside of Alibaba to really be able to provide you with a whole lot of insight as to where this thing might be headed to out here. about the only thing that we can do. Let me try to do this out here. I expand the chart just a bit for us to look at. There we go. Is to, I'd say, watch the volume patterns out here. November 10th, yesterday, makes a high with 75 million shares. Today, you pulled back with 30 million shares. That's a little bit, now, you've got some people taking some profits, clearly. I mean, this thing has been, one heck of a rise since the little hammer that formed out here that was tested October 14th, creates a hammer, gets tested on the trading session of October 15th, creates that little key reversal session, then it was off to the races. And that was from the $85 level to the $115-ish area where you're trading right now. Now, this candle formation, this is a bearish candle formation. It's called the bearish separating line out there. I'm going to be teaching really the significant candles, the dozen or so candles that you only really want to pay attention to in my upcoming workshop that's going to begin on November the 22nd. That, again, is Saturday. All the details are on the homepage of TFNN.com, but it's also one of the, in that first 3-hour session, which can be packed with information that you need to know. And I remember what it is. So, if you're new to technical trading, this is where you want to start. And the reason is from my standpoint, because there's really only two ways that each of us learn, right? We learn either through trial and error, and we each do that, and that's usually the first way that we get into something to see if we like it, whether it's a sport, whatever it might be. So trial and error. Now, trial and error, has a cost. Usually you make a lot of errors. There's a lot of trials, a lot of time. So if time is of value to you, then what you want to do is no matter what it is you're doing, you want to try to go out and find somebody that's done it, somebody that has got the knowledge, some type of coach. I suggest it's a coach that's willing to be there and is willing to give you feedback, respond to you, and I certainly do that to all of my subscribers. I'll be doing that to each of the folks that attend the workshop out there. That's why we've stretched this into a 7-week program, because I'm absolutely, by listening to the show, how passionate I am about doing the show and taking a look at the charts and helping you understand where things are going. And that same passion is really what you want to find in a coach. And from my standpoint, it's the passion that they're there to assist you and help you to understand the ingredients, little nuances. It's all about these little tricks. It's like if you were to, I'm not a great chef out here, but if I had a passion for cooking, I would certainly like to be able to have somebody like a Wolfgang Puck or Emerald or some of these other guys in the kitchen. Because imagine just the small little tricks, that they might have out there that they could share with you. Small little tricks that just simply absolutely increase the flavor of the food that you're cooking. So those are the type of things that I'll be doing with my the people that attend this workshop out here. Again, it's the first session is going to be on Saturday, November 22nd. Then we've got 7 weeks where I'm going to follow up with you by each Monday, taking a look at specific trade patterns that I teach on specific instruments so that we can follow all those trades all the way through, as well as be able to respond. Then we're going to do a live workshop on Friday, December the 9th from 9 to 12. The Saturday workshop's also from 9 to 12 out there. So, if you're looking to take your game to the next level and you want to learn the candlesticks, and it's always so interesting. Which was interesting to me during the trial and error phase, and I didn't last in trial and error too long of trying to of learning about technical analysis out here. What I did was I just simply immersed myself, and I immediately went to Tom's Master Trader course. That was my total immersion. I remember leaving that course and then just simply was consuming myself with books and materials. So I've read a lot of books. I love reading. I love feeding the mind out there. And what I found was so interesting was nobody really put it all together. There were these morsels. There was Steve Neeson did a good job of covering Japanese candlestick charting, but he didn't really teach you how to trade that. He didn't really teach you which patterns. There was a book about all the candlesticks that were out there. One person was teaching you about a certain pattern in the marketplace. Could have been the A to B equal, could have been H.M. Gartley's pattern out there. But in really investigating and understand H.M. Gartley's pattern, that's where I was able to put it together to understand things that even he didn't see out there by putting it all together. So join me for this workshop. It is the 7-week trading course with Steve Rhodes out there. So in the case of Alibaba, it's made this reversal. It's made a bear separating line out here. Volume a bit heavier today, 28 million shares versus yesterday's 75 million shares. 51 million shares was the day before. So it's beginning to pull back here. Where could this pull back to? Well, In the case of Alibaba, if we do see a market that begins to correct, and by correct means just simply, a normal, healthy correction out here that could last up until for the next couple of weeks, Alibaba could get down to the 105 level. That's only a dead cat bounce, only 0.382 retracement. That might be a spot where one would look to enter it. Ideally, you'd see it get back and test simply the high from September 19th, and that would take you into the price range of about 99.70. Look, if you're in this equity, and many of you are because of the way that funds have been buying this over the course of the last week or so out here, this is what's going on inside of one of your holdings, Alibaba. We take a look at things that are moving here to the upside. Let's go take a look at Priceline. Let's go see what PCLN is doing, up $35 out here. Priceline, gap down. This is the daily chart that we're taking a look at. Priceline here was really trying to change its course, but it gapped down. I believe that was after earnings report. That was on November the 4th out here. It gaps down with 3.5 million shares. Right now, you're inside of that gap. There is a pretty good chance. Now, the candle session from October 31st, that's where I'm going. That's got 1.4 million shares. You've done 526 out here, so that's not too bad. If it can close that window, if it can close that gap at the 1172 area, then what you could see is you could actually see Priceline try to form an A to B equals C to the upside. Now, I suspect that is what Priceline wants to do, and it will go ahead and do that when we actually see this one final low that should be coming in over the course of the next, let's see, today is what? Today's the 11th. So we've got about 9 calendar days. So that would take us through next Friday for this low to form out here. I don't know what's going to drive it. I'm still fairly certain that is going to happen. Now, what Priceline has also done is it's found resistance at another gap. And this is a more important gap because it's been tested. And that's the gap, although subtle, between the trading session of September 5th and September the 4th out there. And that says that the level of 1216 is a very important area for Priceline. It tested that. Tested on November the 3rd, 1.1 million shares, and that was really going against 1.7 million shares. So as price moves into the 12-16 level, you want to see it accomplish that with more than 1.7 million shares. Because there was a swing point out there, a little shooting star as well on November the 3rd, you want to see it do it with more than that volume. That also happens to be 1.1 million shares. That's what's going on inside of Priceline. If we take a look at ICUI Medical, ICU Medical actually is the name, up 14%, up $10 this morning. Looks like they're out with numbers. Their numbers go like this. Revenues is $77 million versus $82. So a little bit light in the loafers out there. Also light in net income. So these guys must be guiding to the moon out here because the equity has taken off to the moon. It's at its all-time high, I believe, out at the 81.96 level where it's trading right now. Yeah, it most certainly is. Volume behind the move is pretty big. 372,000 shares, so they must be curing something out here because the books and records didn't support this. So now where is this headed to? Excellent question. Let's go see what the weekly charts, they provide us with any kind of a clue out here. There we go. So it did hit a 52-week or an all-time high, but what it's doing is trading into, from a weekly standpoint, we're only Tuesday, so that's good news. This has volume at the highs, right? High volume high out here. 1.3 million shares took place on July 29th. The high was $85 even, Steven. You're trading at $82. So far this week, 568,000 shares. If it can take out that high, do it with volume, then you've got a large A to B equals CD to the upside for this equity. Where would that take you to? Price projection inside here. And also I'm going to be teaching you the real secrets behind the buying and the selling of the D point, the A to B equals CD tool. So that'll be one of the other things that we review inside of the workshop. If it takes out the 85 level, if it does it with volume on a weekly basis, you're looking at a price projection of 103.42. I would say more likely 116.86 inside of this equity, which is ICU Medical out here. Looks pretty darn good to me. We look at CF Holdings. CF is a ticker symbol, up $8 and change. That's up about 3% here this morning. Let's take a look at it. It looks pretty decent. Let's take a look at this. Also is up near its all-time highs out here. I believe that is from the trading week of October the 6th. Now, price is just trying to get inside there. That low, by the way, from October 6th is $262.99. You're at $263. You can't get much closer than that. Now, volume out there was 5.4 million shares. For the week, you're at 1.3 million shares. We'll switch over, take a look at the daily chart out here, see if this thing is up on volume or not. And we'll look at that when we get back from the break. This is Steve Rhodes with TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. During the break, I was taking a look at the Rackspace hosting out here. RAX is the ticker symbol. Once a darling inside the IBD 50. Of course, it fell out of favor when it had that wide price spread, accelerated volume off of the highs. And this was the month of February 2013. However, what's interesting is this is a monthly chart, by the way, that we're taking a look at. I'd ask you to look at this as well. See if something jumps off of the page at you. Something jumps off of the page at you from a monthly standpoint as it was making its lows out here. See, there's two candle formations out here that identified a pretty decent, not a pretty decent, a very good bottom inside of Rackspace holding. The first one, now if we pull this back just a tad bit further, so Rackspace coming off of the 2009 level went from a low of $4, made its way all the way up into the May 2011 time frame up at $46. Not a bad move. You know, what's that, a tenfold move out there? Makes a retracement. Now, when it made that retracement, it formed this little key reversal, bullish engulfing, morning star, got the whole 9 yards, that session out here. But I'm going to key in on the key reversal session on a monthly basis. This was in October of 2011. Now, when it came off of the highs here in February 2013, volume to the downside was 67 million shares out here. Now, look at this. What this actually did, what Rackspace did in May of 2014, from my standpoint, it was moving higher with volume. It was a key reversal session as well. Just like we saw back here before it had its last move, that volume to the upside here was 129 million. Now, I know if we go take a look at the charts, we'll see in the daily and the weekly where it really had gapped to the downside. But what we've got here is a monthly key reversal. Rackspace holding. If it can clear 42.99 this month, that would be nice. If it didn't stick into it in December. But the real clear level that Rackspace needs to get above from a longer-term standpoint, from a monthly standpoint, is 42.99. You're trading 41.70 as we speak right now. You close above that, and that says that the change in trend inside of Rackspace hosting is underway. All right, with about a minute and a half here left to go, the Dow's up 14, the S&P is up 2, the Composite's up 4, the Russell is just turned slightly green, up 35 cents out here. If we go take a look at what's the New York Stock Exchange doing, that's a good question. Let me see what the NYSE is doing out here. It's up 12 points. You've got net declining issues just slightly. What we do have across the board out here is you've got prices have been gradually moving higher, doing it with a declining price oscillator. Very true inside of the Dow. You would expect inside of the Dow, since it has been the strongest of the indices since the October 31st move higher inside the market, you would expect that we would not see this. Only 30 stocks as well. The message contained here is we are going to see some type of a retracement. As far as diverging patterns out here, in addition to this one, the only one that should have us be cautious is the one that is a correlation between the high yield funds out here. The what I like to use is the Western Asset High Income Fund, and when that diverges from the direction of price inside of the S&P 500, it often forewarns of a impending retracement. Sometimes it can be more than a retracement, and it can be a correction. Because we only have this one primary signal and all other correlations seem to be in check, I'm going with it. This is just simply going to be a retracement. Could be a fast one, could be fast and furious out there, but what we should see is the market somehow, some way, some shape, some form, go ahead and pull back into next Friday out there, and that is what it still looks like. If this correlation didn't have as large of a divergence, I would say, okay, there's really nothing wrong in paradise. But there are a few things that seem to be wrong in paradise. Speaking of paradise, this would be a good time to go pull out that surfboard, wax it up. Of course, if you're in the north, you're not going to wax it up. But wax it up, come on down to Florida, go surfing. Have a great Tuesday, folks. I look forward to seeing you tomorrow morning. Stay tuned. The Chapman Way, Basil Chapman, he'll be up next. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.